Good afternoon, and welcome to this closing panel for the Canada in Asia Conference 2025. The theme for this panel is sustainable infrastructure opportunities, what we have achieved and how we can move forward. This panel consists of very distinguished panelists. We have four, very much gender balanced. Yeah. Samantha Hill and is the head of the sustainability program at CPP Investments, Canada. And then Devin Chen, executive director, Infrastructure Asia, based in Singapore. And Suzanne Carberry is the DG of private sector operations at Asian Development Bank, Manila. And then Laurie Kerr, CEO, Fine Development Canada. We have less than 1 hour to discuss what are the past pathways and the future lies. Many of you know that is the sustainable infrastructure. The investments that is required is huge. Our own studies done at ERIA. I'm from the ERIA Economic Research Institute for ASEAN in East Asia. We are based in Jakarta, working for 16 economies in the region, ASEAN plus 6. Our studies, and it is also supported by ADB and IMF, says that is this region, particularly the developing Asia Pacific, need 1.1 trillion until 2030 to make our region low carbon and climate resilient. These investments are very crucial, not only making the resilience our economic growth, but also reducing the poverty and addressing the global climate risks, because most of the growth is happening in Asia. But this infrastructure investment, there is a accelerated infrastructure investments are needed, particularly in specific sectors like energy, the digital infrastructure, energy efficiency, sanitation and water. We need a public-private partnership to accelerate the capital flows. We know that we need in trillions, but if you look into the figures that is getting into the region, it is in millions. There is a huge gap exists. So that has to be accelerated, that need a public-private partnership. But if you look into this public space, financial space, this is very much limited. And after the COVID and most of the fiscal space available with the public sector is lost. So we need to upscale the private investment. Our area studies indicate we have challenges with this mobilizing the private sector. That includes lack of bankable projects, where that is ADB is helping, that is these bankable projects need clear environmental goals and financeable sustainability plans and the robust risk mitigation. This is often missed in these projects. Then some of the private investment also perceived as a high risk because of the information asymmetry. Green infrastructure projects are often perceived as riskier when compared to these conventional projects. So we need de-risking mechanisms. Third constraint is the limited capacity at the public sector and private sector to analyze these projects to make those correct decisions. But there are pathways to address the challenges. We need to look into innovative financial mechanisms, like how we can mobilize the private capital with the leverage of the public and the international financing. The new windows of opportunities are coming at the international level and the national level. Second, promoting the green finance instruments like green bonds, where the ADB is leading. They are the pioneer in putting 500 million green bonds in this region in 5 years back. Third one is also investing in the capacity building for the private sector and as well as the public sector. So addressing these challenges in a coherent way and a comprehensive way is needed for this region. So this panel will be looking into this, what are the opportunities, what are the challenges, and how we can move forward. So without further notice, I would like to invite my panelist colleagues, starting from the Devin Chen. You have been working in this area, and this asset creation and the mobilization of the private sector. So how this Infrastructure Asia is having the mandate and its contributions to developing the sustainable infrastructure in Asia. Could you please explain?
Well, good afternoon, everybody. Just want to say thank you for having to be part of the panel today, and CIAC as well for inviting us. In terms of the, infrastructure, first of all, Infrastructure Asia, we focus a lot of our works in going to the markets, emerging markets, to identify projects, and both from public sector and private sector. We work on marginally bankable projects, which means that the projects could be at early stage of conceptualization, which means that we also need to have to look at how to better structure these projects, create more transparency, and also to solicit a lot of early feedback from private sector investors so that they can then provide their comments and their commercial challenges if the structures were to remain as they are. So, case in point, we actually ran a pre-market sounding together with ADB and the Department of Transport in the Philippines. What we did there was that we did a pre-market sounding. The stakeholders came down and we organized 10 meetings for them with developers, operators, and also the banks and the investment funds to understand the project structure. So a lot of positive feedback came out of it, but also a lot of, in a way, negative feedbacks on the structures. So one of them was the tenure, the bundling of assets, and so forth. And basically, the private sector then gave a lot of ideas as to how the structures could be improved, such that when the tender eventually goes out, you actually have an audience that's going to consortium up and bid for these projects. So these are some of the things that we do in a sense of creating a bit more awareness and transparency around the projects on those bases. At the same time, when you go into in some of the initiatives, you see a lot of legislation changes in the emerging markets. Again, the Philippines, in 2022, they've opened up quite a few of the infrastructure sectors to allow for private sector companies, international private sector companies, to actually have up to 100% ownership of these assets now, which was an improvement because it was previously at up to 40%. So this is a push in a direction whereby they are more, in a sense, welcoming to international participation as well. So I think these are some of the things that we will go on into market to help to identify such initiatives, identify such projects that will come into market, create the awareness along the way, and facilitate these projects with the Singapore infrastructure ecosystem based here.
Yeah, interesting. And so you emphasize more on the ecosystem and the developing in support of capital mobilization. And that is from the experiences from Asia. And Samantha, and you are working more globally. And what type of sustainability criteria that you have been using for your assessments? And do you have any experiences from CPP investments?
Sure. Thank you so much, Anbu, for the opportunity, and lovely to see everyone. Maybe just a bit of context for anyone who's not familiar with CPP Investments. We're the global investment management organization that invests the Canada Pension Plan funds, about $700 billion Canadian in assets under management, which is just around $500 billion US dollars, and we're in service of the 22 million Canadian beneficiaries and contributors that participate in the plan. My role, Anbu, is as the head of sustainability integration at CPP Investments. And what that means is that I work across asset classes, across investment horizons, across geographies with the teams that support the consideration of sustainability factors, material factors into investment processes. So that's from due diligence, early stage considerations, and then through to asset management, and finally through to exit considerations. And so sustainability is really critical to how we invest and to our delivery of our mandate, which is in service of investment performance and investment returns. Maybe just quickly also talking about the Asia-Pacific region and why it's so important to us. We are headquartered in Toronto with 7 global offices, like I mentioned, diversified globally across asset classes, private and public equities, credit, fixed income investments, as well as real assets investments, which include real estate, sustainable energies across the energy continuum, and then, of course, infrastructure, which we're talking about today. But, our local presence is across Mumbai, across Sydney, and Hong Kong, which I have the pleasure of going to next week to spend time with our colleagues there. And about $130 billion invested in the APAC region, Canadian, so just under $100 billion US. And that represents about 19% of our assets under management. This is across many countries in the region: Greater China, India, Japan, Australia, South Korea, and then also across Southeast Asia. And of course, we are globally diversified as well and operate across many, many countries. But part of what is so important in our diversification approaches and our strategies locally are the partnerships that we maintain on the ground. Just as it relates to our infrastructure investing approach, I mean, we have a strong track record there of large, complex transactions, certainly across the region, includes toll roads, water management, logistics, digital infrastructure, also across energy and renewables. And, through this real asset strategy that our infrastructure investing strategy sits within, we can hold through economic cycles. We can have a long horizon. And again, the partnerships that we set out to have with strategic players in the regions and making sure that the mindset is long-term and aligned is really critical to our ability to deploy at scale, into infrastructure investments in particular. And those investments are so critical to our mandate and the delivery of the performance and returns that our fund is mandated to provide. And as it relates to sustainability, the sustainability approach is only about consideration of material factors, those factors that will translate to impacts on our investment returns. And so it's all in service of investment performance. And our view is that companies that manage and anticipate sustainability considerations are more likely to endure. They are more likely to be resilient. And so that's the foundation of our investment approach as well. And it helps us to arrive at better informed decisions, which means we can provide better and more stable returns for our Canadian contributors and beneficiaries.
Thank you, Samantha, and very inspiring. And the sustainability criteria has been incorporated and in each and every of your projects at the high level. So coming back to region again, Asia, and Suzanne, and ADB is the critical for the region, for the infrastructure development, and you have been expanding that private sector window, and not only sustainability but also inclusivity is also important, and so these are we call it the deep sustainability, and so what ADB is doing and how the private sector window of either loan and also grant, how you are helping.
Thanks very much, and very much a pleasure to be here. And Yeah, so the Asian Development Bank, just for as a little, Canada was a shareholder starting in 1966. So Canada's been a shareholder from the origination of the organization. And, ADB was originally a sovereign infrastructure bank, so infrastructure's always been at the heart of what they've done. But over the last 20 years, we've expanded and actually started doing business in the private sector. And what that means is that we fund the private sector on a commercial basis with tenors and other tools, be it blended finance, be it technical assistance, to actually, and know-how, really, to actually see how you can actually make those projects happen. So, we do have sustainability at heart. Very much what Samantha was saying is that when we're looking at deals from the very beginning, you're looking at what kind of impact it will have, but also what kind of return. I am required to be financially self-sustaining, so we want to ensure that the investments are there for the longer term. And I think that, for me, or for ADB, Asia, which is interesting because it goes all the way west to the Caucasus, east to China, and south to the Pacific. So again, it's that Asia Pacific, which is in the greater sense, I would call it. And I think that, part of the whole idea is that, we're looking for, that development impact, inclusivity, as you also said, but climate solutions. So, ADB's really been trying to put itself as the climate bank in the region. So we have a $100 billion target over the next few years to actually provide $100 billion in totality to climate financing. 12 billion of that is to come from private sector, and then the rest of it is to come from the sovereign side, but I then need to mobilize another 18 to $30 billion in mobilization for the private sector. So that kind of gives you an idea, and this feeds into some of our discussions that we were having before, is that the G20 discussions, it's about private capital mobilization. So where are we bringing in the financial partners? Where are we bringing in, those partnerships, which will be key to this? So, just to give you a little idea on that, so, we have different instruments, I would say about 90% of my book now, just to put it into context, last year on a short-term and a long-term basis, overall from the private sector, we provided $11 billion in financing. Some of that includes trade finance, but the majority of what we provide financing to is infrastructure, sustainable infrastructure, and financial institutions. So we do support health and education, as well as agribusiness, which, on a food security basis, but that kind of gives you a little bit more of a remit. And so that means that we're primarily providing debt, in various forms, whatever that might be. Equity investments, so we have a equity team which looks at venture capital, direct equity and funds. And then, of course, we have guarantees. And so I actually have a whole guarantees and syndication unit. Their job is to actually bring in financial partners, including some of those here with FinDev Canada, in looking at investments in the region. And of course, co-financing, blended finance, where can we provide concessional tools which are meant to de-risk, but not market distort. So I think we follow that principle very clearly to ensure that you are providing financing for innovative infrastructure. Majority of the investments that we've done in the blended finance area, I would say 9/10 of it is all in the renewable energy infrastructure space, and really trying to provide solutions to that. So again, it's about partnerships, and we're doing some really cool stuff, I think. Last year we signed some, our first sustainable aviation fuel transactions. We see that as $1 trillion business, given, the way that things are going. We've done cross-border finance of huge wind projects in Laos coming across to into Vietnam. We're again using blended finance to mitigate risk on power purchase agreements. And you have this thing where you have birds and you don't want to harm the birds, so the turbines don't go all the way. So we do have this portion that you need to kind of make that PPA then bankable. So there's all kinds of creative ways that we've been truly trying to look at, because we know that infrastructure needs in the region are massive. Numbers that we've heard about it, about $1.7 trillion per year. So the needs are huge, and we want to help facilitate that. And it requires partnerships. We can't do it on our own.
Thank you, Suzanne. And this blended finance and also this inclusivity. And I think many things have been experimented and several innovations are happening that have a multiplier effect in this region. And coming to Lori, and Canada is already supporting ADB, and then Fin Development is coming in. And what is your experiences or the outlook for this sustainable infrastructure investment in this region? And
thank you, and it's a pleasure to be here. It's really been a fantastic couple of days, so congratulations to the Asia Pacific Foundation. It's been really, really wonderful. And so we heard from Suzanne, Asian Development Bank, 1966. We're a newcomer, so we're the newest development finance institution. We were created by 2018, and we're a Crown Corporation wholly owned by the Canadian government. And what do? We provide financing and investment, blended finance solutions, technical assistance and advisory to support sustainable and inclusive growth exclusively in emerging markets and developing economies. We work in 3 sectors, the financial industry, ag, forestry, and their value chains, and then the purpose of today's conversation, we also work in sustainable infrastructure, supporting low carbon, climate resilient growth pathways in the markets that we serve. That includes across the energy spectrum, emphasis on renewables, transportation, emphasis on electric mobility, water and sanitation, as well as digital connectivity. So sort of the economic infrastructure sectors in the broader infrastructure space. We're a development finance institution, so on the financial institution side, like Suzanne mentioned, we have a dual mandate. We're required to be financially self-sustaining. And because we're a development finance institution, we also look for development and sustainability. And so we have 3 impact lenses that we look through when we make our capital allocation decisions. The first one is positive impact on climate and nature. The second is gender equality and women's economic empowerment. And the third is local market development. So again, these are the lenses through which we look when we're looking at different financing and investment opportunities. In terms of geography, heretofore we've been focused on Latin America and the Caribbean and Sub-Saharan Africa. Again, a young DFI started in 2018. And part of the reason that we're here this week is to announce our opening in Singapore. So we're establishing an office here in Singapore with boots on the ground to really start to build our practice here. Of course, a key focus of that is in the infrastructure space. And why here? Well, exactly as Suzanne said, there's $1.7 trillion of investment need in infrastructure annually in the region. It's just absolutely enormous. And the development challenges that emerging markets face within the region, it's a tremendous investment opportunity for all of us. So that's why we're here. And similar to, as Suzanne mentioned and even Samantha mentioned, it's all about partnerships. And so we're really grateful to have a really deep-rooted partner like ADB in the region. We signed an MOU with them about 18 months ago to kind of kickstart our activities here. And of course, we'll work with other partners as well as private partners, including financiers and investors. So tremendous opportunity in the region. We're really, really excited to be here.
Yeah, thank you. And this partnership is the key word, and that is coming from the developed Canada. And so, if you summarize, that is what I learned from your input is we need a transparency and the stakeholder consultation, and then high level of integrity with the key performance indicators, and then public-private partnership and blended finance. These are the kind of a message that we get. But if you look into this trajectory, that is what happened in Asia. Asia is growing very fast, and what it took for the Europe, Canada, for nearly 200 years, the speed at which the growth happening is very, very high. So what type of changes do you observe in Asia, particularly in the case of the landscape of the sustainable infrastructure? And what could be the lessons that we can learn from it and the future trajectory? Yeah.
Do you want me to?
Suzanne,
okay.
yeah.
Okay. Thanks very much. Lessons learned and what's been going on. Actually, in I've been in development finance in the private sector for some 30 years. What I see going on in Asia right now is far more dramatic and dynamic than I've seen in a lot of other parts of the world. I've had the fortune of working in 80 countries and developing markets. But what's really interesting is that here you see a lot of attraction. I think there's a lot of skills. I think there's a lot of opportunity here. There is significant difference between the markets. In some markets, you'll see, a lot of liquidities, particularly in the short term, and other markets where, you don't have that. So it makes that, when you're looking at lessons learned, I think that, you need to be a little bit quite specific. One size fits all does not work. And so you're going to have to be a little bit more targeted. One other thing that I would say is from a development impact or financier point of view is that last year we had there was some information that was released on the GEMS database that came out of World Bank IFC. And as you can see, financing with the development finance institutions, the loss rates, people always talk about being risky. And I think that with the shining the light on actual statistics and information shows that with the right partners, with the right results, it is, you can make those returns that you're looking for. And I think that, that's part of what's going for. And I will put a little number out there. With all the years, 20 years of investments, I think that just from a private sector point of view, I think the number that we've lost is around $20 million, period, for the hundreds and hundreds of millions of dollars that we've put out there over the last couple of years. I would say billions of dollars. So that just gives you an idea is that, it's not as risky as you think. A lot of it, as we know, is market perceptions. And I think that there are the opportunities. What I see happening, post-COVID, supply chain reconfiguring, there's a lot of different ways of working. I know a lot of countries are looking to actually support more local industry. So those all provide opportunity. Canada has huge opportunities in technology, know-how, education, and I foresee those as, requiring engagement. And that's what, again, you need to come, you need to invest, you need to take the time, because this part of the world in particular, it's built on relationships and therefore trust.
Even you'd like to add, or you agree with?
Yeah, I'd just like to add on, I guess, in blended financing and all this stuff, it's all very important. And in the region, assets, some of them are quite old, need a bit of revitalization or renewal in that sense. I think a lot of us would have like renewable energy, but at the same time, we also need to look at the grid in terms of some of the enhancements that need to go into place. So I guess in a lot of ways, when we look at infrastructure, technically speaking, we should try to also look at innovation and technologies, the AIs, the digital infrastructures, to try to keep it more resilient over time and so forth. At the same time, I guess, in our markets, in terms of financing, it's also interesting because we are seeing more activity. We're seeing a lot more infrastructure investment funds, be it from the equity perspective or from the debt provider's perspective. And at the same time, as we mentioned, blended financing, a big word, but there is a lot of attraction here. Just in Singapore alone, we've seen 2 platforms come out in the recent. Singapore has come out with the FAST-P, for example, and also the Southeast Asia Clean Energy Fund. Which basically looks at early stage development capital to try to drive transition towards low carbon in the region. So I think some of these initiatives combined with what the likes of ADB is doing, the DIF Canada as well, is going forward. We hope to be able to show you guys projects down the track. And that's what we do, and from a project facilitation office perspective. And hopefully we can better structure these projects on a scalable basis. A lot of times we try to make sure that the structures are replicable, and so that it's a little bit easier for investors and so forth. Yeah.
Thank you. As you know, we have been talking, I think Suzanne mentioned about that investment that is needed, and there is also a huge gap that exists. And Larry, you mentioned that is the Develop Canada and Fin Develop Canada has been prioritizing some sectors and like sustainability action, the climate action, and the nature-based solutions. And how do you institutions within the Canada and how you are coming together and what is your outlook and for investing in Asia and these priority sectors?
Sure. Maybe, do you want me to start, and then I can pass it over to Sam as another Canadian institution? Absolutely. So I certainly don't speak on behalf of the Canadian government, but I think Canada as a country has been doing a lot of really great things to afford more attention into the Indo-Pacific region. And maybe I'll just mention 4 aspects. First is the Indo-Pacific strategy that Canada launched in 2022, which has been a sort of a heroic effort to bring not just more Canadian companies, but also Canadian resources into the region to become a more reliable and credible partner. And within that Indo-Pacific strategy, actually FinDev Canada, we got our mandate expanded to move into the Indo-Pacific region. So I think putting a lot of attention into the region, a big part of where we're focused, as I mentioned, is on sustainable infrastructure. We've got boots on the ground now so that we can build those partnerships, deepen those partnerships in the region, because as Suzanne said, things are built on trust. And as I often say to my team, our business moves at the speed of trust. And so we're here for the long term. Canada's here for the long term. So that's one thing. It's just this Indo-Pacific strategy, which is a huge strategic aspect. I would say the second one is including new tools in the toolkit. And at FinDev Canada, as part of the G7 announcement last year in 2024, the Prime Minister announced $720 million in concessional finance for FinDev Canada to be able to offer blended finance solutions. 700 of that is on the concessional side, $20 million for technical assistance. But this is a huge step forward and a real commitment on behalf of the Canadian government to provide blended finance solutions through FinDev Canada to address some of the risks, the real and perceived risks of investing in emerging markets in general, but also in the Indo-Pacific region. The third thing that we're doing, FinDev Canada as an institution, we're actually leading the development finance track under Canada's G7 presidency this year. A big focus of that in the development finance space is increasing more investment in sustainable infrastructure across emerging markets. So again, we're really leaning in on the infrastructure agenda consistent with the PGII, which is the Partnership for Global Infrastructure and Investment. So big push on the infrastructure side again there. Maybe the fourth thing I'll mention, and I'll pass it on over, is very grateful for the support under the Indo-Pacific strategy for FinDev Canada, but Canada's also supporting a lot of other really amazing organizations, like the Asian Development Bank, also providing funding to the Asian Development Bank for climate-related funds and blended finance solutions as well. So supporting other institutions and the Asia-Pacific Foundation, giving the opportunity to really expand into the region as well. So I think Canada as a country is doing a lot of really amazing things, really committed to the region and leveraging all the tools in the toolbox.
Samantha, would you like to add anything?
Yeah, absolutely. Thank you. We evaluate our infrastructure opportunities on the basis of their long-term potential to deliver returns, and certainly geographic exposure is a critical consideration within that. And as I've mentioned, the region is really important to us in terms of looking for those opportunities and crystallizing and realizing them. And so, private capital is super critical to just participate in that and participate in the substantial scale that is needed and required for global infrastructure investments. I think we've already touched on quite a bit how much partnership's important, and that long-term horizon perspective and the ability to persist through different cyclicality and other economic considerations. And we underwrite and we look at opportunities with all of that in mind. So even though we don't have a specific in our approach to infrastructure investing, we don't have a specific regional profile or target that we're trying to achieve. We have pretty strong principles that guide us. And so, as it relates to the asset base, it has to be stable, long-term cash flows. These are things like I mentioned, toll roads, rail. But also we're really interested to understand some key thematic pillars. And so sustainability is absolutely one of those pillars. but as well, demographics and digitization and deglobalization. These are the critical things that we're trying to understand and then invest against. And maybe, we've talked a lot about the partnership elements and how critical that is, but right alongside that partnership element are the stakeholders and the governments and the local players, and that's really important to understand well, and that's also, what we look for in the partnerships that we pursue is just who can help us navigate and really understand that risk profile and the opportunity profile, so it can all be realized. And certainly sustainability, I mentioned, it's a theme, but it's also a thread through all of our underwriting, asset management considerations. One thing I haven't maybe focused too much on yet is just how we think about climate change within all that. And I mean, climate change is relevant to so many different assets and so many different geographies, but as you think about infrastructure and that long horizon, it really is critical to get it right, or at least have a clear understanding of all the elements that we need to understand over the hold period and how those might change and how those can affect the return profile, and continue to do that as we re-underwrite through the hold period and asset management activities. So those are the critical themes, I think. Like we're investing in assets that we expect to be resilient and we expect to produce the returns that we need.
Thank you. I would like to add, Devin, yeah, it's an interesting, and there are several messages are coming up, and one thing is very clear in this two round of discussions, and we need an ecosystem, and that includes the strong regulations and the policy frameworks to support the private investments. That is second thing is, again, it is not a public only, it is a public and private partnership, and focusing on the people, and the public-private people partnership is needed when we are talking about the sustainable infrastructure. And third one is we need Canada and the development partner, and there is an our own estimation says about 100 for ASEAN. We are working on the ASEAN, this 10 small and medium-sized emerging economies. They need around 120 billion per annually that is needed, and that need development partners like Canada Development and also ADB. And given this situation and these necessary conditions, I would like to go back to the audience and see what is their reactions. If you have any questions or comments, please address, and please identify yourself. Then say it is your question or comment.
You're all shy? Or you're just too excited because of the Canada beat the US?
Is there any questions?
Maybe if I can just, if we don't have any, if I can make just a shout out, I wanted to do this before to the Canadian government and Global Affairs Canada. They've been a huge supporter for many development finance institutions across the board. And so we've been very fortunate to have a very good relationship with them. They have provided us with blended finance capabilities, which have been really the key for many of these sustainable infrastructure projects, because it is truly about pushing the envelope on innovation, trying to look in different markets where perhaps things like global public goods isn't necessarily there yet. So with those kinds of supports, it requires I would say, a PPP type structure where you have upstream from a sovereign basis, midstream from a PPP basis, and downstream from a private sector basis. It all needs to work together because you need the right environment for the private sector to be there. You need the right rules, regulations, and working with the governments in order to put those in place to create the right enabling environment is key. And I know Canada has been a big advocate for that. Thanks.
So when here, if you look into, I think it's a good point, but if you look into this connectivity or the cross-border infrastructure, if you see there is this region believes in the regional cooperation, and where this cross-border infrastructure development is needed, whether they're developing the highways or the energy connectivity, or further it is now it is coming the digital innovations. The main challenge here is some of them, as Susan mentioned, is a public good in nature. So public good in nature means it has the inherent risk, and where profit may be not coming immediately, and so we need a de-risking mechanisms. So in this kind of a collective public good in nature, and who could be the game changer in bringing this de-risking of these projects? This is the public sector or the private sector or these multilateral banks?
Well, I think everyone needs to come together, right? It's not any one organization or individual. And that's where we need this coordination. And I think that we've not seen this coordination to the great degree before. It's starting to happen. And I think that, that will be the key.
I mean, at the end of the day, it's also, like she said, blended financing, but it's also blended financing funding from the equity perspective as well. So you'll be looking at not just, the typical infrastructure funds or the developer funds, but actually looking at the philanthropics as well, the climate change funds, and then maybe layering that up with layers of guarantees along the way, or insurances that protect the asset, I mean the stakeholders' interests during the development phase, and also during the operational phases as well, in terms of the revenue streams and so forth.
Samantha, would like to add anything on this?
I mean, I just think this point of everybody's got to come to the table and provide the things that they know how to provide, and when you do the work to understand what the risk profile is, and you can have a presence locally, like, it's so important for really being able then to mobilize and put the capital to work, because we all know there's a massive need.
And maybe just picking up on the point that Samantha just made about risk profile, and building on what's been said here, it is the ecosystem, and you said it yourself. The de-risking starts way up front with legal, policy, regulatory frameworks, strong institutional capacity of host country governments, the contracts that are being let, and what have you. So there's lots of, we can de-risk downstream with blended finance and all sorts of partners at the table, but the true de-risking really starts way upstream with what host countries doing. So I think that important part of it's an entire ecosystem is really, really key.
Interesting. See, this panel, we are talking about the sustainable infrastructure opportunities, and also where this region can move forward. And when we say that is the infrastructure, we are not only meeting these targets or filling the gaps, but bringing the integrity of this sustainability that has the long-term benefits. And also it means we need to address the climate risk. And given that context, and do you have any specific examples and how you are doing? And for example, natural positive solutions, and then climate risk and the sustainability. And do you have any specific examples to share?
Well, I've got a nice one that I mentioned before. So we did last year, at the end of the year before, the Laos monsoon wind transaction. This was a cross-border deal. It's a 600 megawatt wind power plant, which will export and sell 100% of their power into Vietnam. And it was the largest syndication that we've ever done. It's like about $1 billion worth of syndication. And it requires partnerships to do this. Requires from different financial institutions, commercial banks, and then of course other types of money that you need to bring in. But it also requires a huge amount of work working with EVN in Vietnam and trying to get them to understand what these long-term partnerships and then, so it requires all sides, upstream, midstream, and downstream, because without a working PPA in a PPP structures, without the government understanding, what's going on and what their commitments are, because this is a 25-year PPA. Things are changing, things are dynamic, and then with you putting all these structures in place, then you need to put the financing in place. So it requires, all kinds of different solutions for this. And so you really put your thinking cap on. But these have huge impact, these types of investments. And, that's one, but there's many others that I can talk about. But I think that it's a very dynamic and interesting space. I think the opportunities in the region now are significant, despite all the noise that's going on there. And I advocate a steady course, but, volatility is the new norm.
That is a hard reality. And we are running out of some. We need to close the panel. But there is what we are discussing about the scale and the upscaling the investment and the sustainable infrastructure. And another dimension is the speed. So there is SDG targets need to be met by 2030, and we have Paris Agreement, climate agreements also 2030, and the net zero targets are around the middle of the century, 2050. Knowing that is the urgency, and we need to accelerate this infrastructure investments. So if you look into this region, Asia, and what will be the one keyword that you can send it to our stakeholders, particularly the public sector and the private sector, that can accelerate the investments from the private sector?
Well, I guess the one word would be replicability, in the sense of, because we need to be able to roll out projects. If structures are replicable, then it's a lot easier to do projects in that sense.
Replicable. Samantha?
So many words. I'm gonna choose, maybe especially in the consideration of infrastructure, adaptation and resilience, and they're just so critical to understanding. Even with temperatures held, if those commitments were met, the climate is changing. It will continue to change, and so those are critical aspects to address in terms of resilience, adaptation.
My word will be transparency. So it kind of encompasses a lot of these things, because what we find often is that you may be using a particular word, but different people have different understandings of what that means. And you're looking at it through your own lens. So I think that it's really important that you have those conversations. And the other word I'll slip in is partnerships, but it's transparency that is the key in all of this. So you can actually have those conversations and have that understanding.
Later.
I would say I would add a different word. I'd add risk sharing into risking. I think that we need that to really accelerate greater levels of private investment coming into infrastructure in the region.
Sure, and that concludes our panel, and the keywords are replicability and innovation and transparency and risk sharing. I think these are the four mantras for upscaling and speeding up this sustainable infrastructure investment. Once again, thank you very much, and let us give a big applause to all the panelists.